afternoon. This is Chris Robinson, Robinson Ag Marketing with today's post-close grain and livestock comments for Wednesday, October 29th, 2025. Whippy day in the grains, very whippy in the protein complex. We're going to get right to it. December corn with a 5-cent range finished up 2 cents at 4.34. November beans, which is the delivery month, we're not going to talk about that, but it was up 2 cents. Jam beans with about a 10-cent trading range, 13-cent trading range, 98 to 85. Finished near the high of the day, unchanged almost. Was down 3/4 cent at 10.94 and a half. If you're not looking ahead to 2026, it's time to start. We're at $11 out there, trading right around that number. We did settle down 4.5 cents at 10.98 and a half. It's a wake-up call, 1-year high. $11 works for most people. I know there are some guys out there that don't make money in beans if you ask them until it goes to $19 or something crazy. But for the rest of us, you got to wonder if $11 makes sense for you next year. Maybe you should do something about it. Get a plan together. Look at some hedges. December 2026 corn trading at 464 and a half. Same thing goes there as well. I mean, we're have had limited opportunities to do anything. It's just starting to get interesting out there. I think if we can get up north of 475, that's going to be something we're going to look at. When you look at that carry between D's, D's 25 is at 434, D's 26 is at 464. Not much, but again, start to take a look at 2026, especially the beans. Beans are giving you a 1-year high like that. Take advantage of it. Do something. At least get a plan together. Have some targets out there. If you don't know what those targets would be, get yourself a broker or advisor that can help you pick them out. Again, when somebody gives you cash shell targets, they're not divining the future. They're helping you make the hardest decision there is, which is to make a cash sale, right? And if you don't want to do the cash sale, then you set the hedge on paper. It's pretty simple. Get your risk on paper. If you are unwilling or unable to make a cash sale that forward out. December Chicago wheat with another 8-cent trading range, 26 to 33. Finished the day up 3 cents. It's nice to see at least we're holding steady there. Kansas City versus Chicago. You've got Chicago at 5.32 and a quarter. You've got Kansas City D's at 5.22 and 3/4, up 2 3/4 cent. Again, the wheat is fighting at 5-year lows. We've had a little bit of a bounce here, but we're still fighting hard here to carve out a bottom. I think if you're storing wheat, you want to make sure you keep some sort of floor under you. Vice versa, if you get a rally that you want to reward, don't feel like you have to cap the upside. You can always take a look at re-owning something out because nobody knows what's going to happen in the next 6 months when it comes to weather, when it comes to politics, right? In the protein complex, these fat cattle finished up about 4.325 at 230.9. Nice to see a little bit of a recovery after cattle, quite honestly, just getting hammered here. Yesterday's low in these cattle was the lowest since August. So almost a 2.5-month low. Our first real correction, but boy, look at the snapback. The snapback we had and the break that we had. The break was from 248 to yesterday's low at 223. The recovery today, was it very technical? We'll take a quick look and see. You take that high, you take the low, and lo and behold, we came back about 38%. That 233 area is about a 38% recovery. A very pretty powerful recovery back. Not that unusual. The key is now is, are we going to go take out 240, 245 and start this rally all over again? If you had hedges on with me, we tried to roll them down and get you paid on those hedges. If you look at November feeders, up almost $9, up 8.675. Finished the day at 342 even. 342.075, excuse me. Same thing, a tremendous 6-day collapse, really, from the contract high at 382.80. Yesterday's low 327. That's not a miss. 327.7. That's not uh, miscalculation. And how much of a bounce did we have back? Well, again, if you like those types of recoveries, we did come back. There's a gap on the daily charts. We're kind of in the middle of that chart. We couldn't fill it all together. That gap gets filled in November feeders at 352.20. So that'd be a level I'd watch tomorrow for producers or for speculators. Again, of a severe correction, no two ways about it. I broke it all down in my letter today. If you're not getting my letter, if you'd like to receive it, reach out to me directly. I can sign you up. You can go to my website and sign up as well. But if you take the big move, and I'm talking about the 1 year move in November feeder cattle from 258.50 to our recent all-time high there at 382.80, a heck of a rally. This key retracement we hit, this 334 half level, it's a 38% retracement. So again, it took a year to rally from 257 to 382, and it took roughly 8 days to get back almost a little over 38%, just call it 40% of that rally. So a vicious sell-off. This is why we hedge, and we'll see if we can, turn this ship around and start getting the prices to go higher. Nothing's changed radically. There was some talk that they might not reopen the Mexican border sooner rather than later. Last week they had been talking about possibly reopening it. If they reopen the Mexican border, that means all that cattle will start coming back up that's been shut out. I think that's probably more significant than whether or not they bring hamburger up from Argentina. But again, there's a lot of meat still on the bone on that rally. Yes, we had a nasty pullback, but it doesn't mean we can't turn around and go higher. Anybody that tells you that they can tell you where the highs and the lows are, I think they're kidding themselves. However, if you're a producer, what are you? You're always bet long. What you want to do is make sure that when we get these great rallies, you take some steps to hedge the value of the gain. You want to hedge that revenue, and also when you're doing that hedge, you don't want to get in a situation where basically you're hurting yourself with your hedge. I can't say that enough. So this is a great market for a long option strategy. If you buy a put as a hedge, if you just buy the put, if you're long the option, once that's on the book, you don't expose yourself to further margin calls, no matter what the market does. Where you get in trouble with hedges and margins is if you hedge with futures, obviously, or you do a strategy where you um, buy one option, sell another option, which puts you at risk. There are strategies where you can do a vertical bear put spread or a vertical bull call spread and not be subject to margin calls. But when you do things like, buy a put and sell two calls against it, or buy a put and sell a call against it, you're opening yourself up to margin calls. So it can be a very expensive lesson to learn if you're not working with somebody who can sort of guide you through those risks. And finishing up with the these hogs, yesterday we did go down to the lowest price we've had since August, almost a 3 month low. Again, that correction was a 38% correction. So isn't that odd that we saw a 38% correction in the feeder cattle rally, 38% correction in a lot of the other markets, and you see a 38% correction, and a correction of what? Well, I'm talking about the overall move. The April parif low for the lean hogs was 67. The contract high back in September 29th, just a month ago. And 1 month ago, we were at contract highs. And then here it is. We've come down and given back, 38 to 40% of it. People were wondering if we were going to go down and give back 50% of it. That would happen if these hogs went down to the 79 level. So again, it's a decision point for everybody. If you're long, if you're short, do you want to re-own animals you sold up higher? Do you want to adjust your hedges? Decisions when we move like this, and that is why we hedge. We'll see if there's any big news coming out of the Chinese meeting, yes or no. You got to remember that the discussions are not going to be anything more than memorandums of understanding. The Chinese did buy a couple cargoes out of the Pacific Northwest yesterday. It's the first time they bought soybeans, and they were 2025 beans. First time they bought beans all year. They had been sitting on their hands. Do you really think it was a coincidence? It was the day before their meeting with the president? I don't think so. So we're back to playing three-dimensional chess with these guys, and there's a lot riding on what comes out of this meeting. I think with President Xi and President Trump. At the end of the day, right now, soybeans and soybean meal coming out of Brazil, they're cheaper than the United States. So even if they were to say, okay, we'll start considering the U.S. again, there's nothing. They're not bound by law to buy beans from us. They can get them cheaper somewhere else. And then we're right back to the problem that we've been sort of growing into for the past 15 years. For the past 15 years, South America has been planting more and more acres. Um, South America has had China come down there and spend billions of dollars in infrastructure, helping them build roads and bridges and improving their port facilities. Because China was playing the long game a long time ago. They don't want to be in a situation where if something happens, they can't get soybeans and soybean meal from their people. They have 1 billion people, and they have 500 million hogs, and those hogs need soybean meal to eat. So they are playing the long game. Hopefully, we can get back to at least where we were before, where the Chinese took 25% of our crop. If not, I think the policies at home here are going to have to change. We can't have a situation where you lose 25% of your market share and never get it back. I harken back to what happened in the 80s when we had the grain embargo with Russia. After that, we never got that business back. Once we embargoed the Russians when we invaded Afghanistan, that was under President Carter, that business was pretty much lost forever. It started coming out of the other parts of the world. And again, when the market gets artificially impacted by politics, it's like water. It finds its own level. Other people on the planet will um, try to meet the needs of meet the needs of all the demand. So there's a lot of opportunity here. I'm not a pessimistic person. Hopefully, we get this thing straightened out. We get back to realizing that we need each other. China needs us, and we need China. It's better off when we are happily trading with one another. So keep your fingers crossed. Hope for the best. This is Chris Robinson. If you're looking for help, take a look at my website, Robinson Ag Marketing. Um, my clients get a daily letter and a weekly letter with specific levels. I talk about exactly what we're looking at here. Then once a week, I do a private client podcast where I share it with you. You can take your time, you can go through, you can slow it down, you can see if you're curious, what is this guy talking about? Why is he talking about this level? What is going on? It's a way for you to learn some stuff. I share with you what I've learned in 32 plus years of being in this business. I did spend 18 years on the floor trading my own account. I was not a broker. I just traded in various pits in Chicago. In 2010, after the floor basically closed, the open outcry pits basically went away. People were standing down there with computers on their laps, hung around their necks, basically, trading the screen while they were standing in the pit. I decided to make the transition and get away from that. Luckily, so I've been working with farmers and producers since 2010. Robinson Ag Marketing, I started 7 years ago. This is my 7th year. And you can see me on Iowa Public Television. You can see me and hear me on RFD TV. I'm available if you have a marketing meeting and you want me to come out and talk to you. We'll come out and have some pizza, have some good discussions about marketing strategies and things that maybe you're not used to. If you don't understand options, if you don't understand what having a good a plan, at least a structured plan on how to address risk could help you with your marketing plan. So again, this is Chris Robinson, 312-638-8868. Looking forward to hearing from you. Have a great rest of the night.